Sunday the 19th of February and we are on the Australian dollar, US dollar. Let's have a quick recap of this market from last week relating to the analysis video from last week, and then we will have a look at the price action for the trading week ahead. Okay, so last week we were basically looking at this section of price action right here. What we were watching for was potential ranging price action with the market bouncing between resistance and down below at these key support levels. Now the market did this last week and then we had this strong break up right here. So basically what we're looking at when we've seen this was a couple of things. For day trading, what I was saying to subscribers was we were looking at a breakout of resistance and we could then watch for the pullbacks and buy positions. Now this was for day trading. The market pushed up, broke out of the resistance area, it pulled back, and we had a couple of very, very nice long position setups down at these levels. But what we also went over was how what we were potentially seeing was a false break. Now a false break, you tend to see it on things like this, where we're trading in a tight range, or when a market is trading in a type of pattern, something like a triangle. What you see is a breakout, or what appears to be a breakout. That's what we've seen right here. What has actually happened is we are seeing a false break. We get the breakout, it triggers in breakout traders who have been watching at these highs, looking for the market to start breaking up. They get into long positions, expecting a large bullish move up. But what actually happens is the market pushes up, it takes out all of the stops sitting up here for everyone who's going short at these levels. That's what it does first. It triggers in the breakout traders who are looking to go long as the market starts to break above these levels. It then reverses, comes back down. It's already taken out the stops from everyone who was short at these levels. It's triggered in the breakout traders. It starts to come down and it takes out their stops. Now, very, very often in markets, you're going to see things like breakouts. One of the main reasons that I don't trade breakouts of price action patterns like this. That's exactly what we've seen. It's exactly what I was saying to subscribers. Basically, we had seen the strong move up. As day traders, we could watch for the pullback into support for those bullish bounces, which we got. But what I also said was we can't look at this as a breakout until we get confirmation. So until we see the market holding up above these levels. What we have actually seen is the market pulling back down once again. Okay, so into next week, it's really the same levels we are watching. We're still looking at this level right here, and we're still looking at this level down below. Now, if the market does begin to break up, we have key resistance levels sitting up above. As we've gone over in a number of weeks, we can see the last time price has been up at these levels, we've had lots of resistance. And the market falling away multiple times. So if we do start to break up, we can still look up at these levels. Now that we are breaking back down, we can look at the support area for those bullish bounces once again. And we can also watch up at these levels for potential resistance, because the market is breaking back down into this ranging price action. This is why when you see breakouts, you just want to be a little bit careful. You want to wait for that confirmation before you start reading the market as suddenly in another upward move, because very often you see this type of reversal. Okay, so that's pretty much everything going into next week, guys. We are still looking at the key resistance and the key support. If we do start breaking up above once again, we still have these very, very nice levels up here, which are potentially very, very good for those sell positions. Okay, so I hope you all have a good trading week next week. As always, I hope that was helpful. I'm James Orr, and thank you.